Hello traders, welcome to FreeFX. Today is the 29th of November. We are very close to the end of the month, so today I'm just going to really try to finalize what this week will mean for everybody trading the SPX. So the video will look at SPX in different time frames, and on this particular occasion I will not go into fundamental analysis because my last video already covered all the eventualities and the situation for that. So it's going to be just a brief catch up on the SPX and what is happening this week. Started the week yesterday, obviously, so we are 24 hours later, trying to have a look at the index and seeing what has happened recently. So that's the double channel edge there. As you can see, we've got this amazing price action recently, and I just kind of wanted to highlight how important this is because last week we had a real dilemma, or personally I had a real dilemma in terms of where this was going. So if you remember this big CPI push from the last CPI print at the start of November, I'd already sort of calculated that we were going to basically come down in price around sort of this level, and that sort of didn't quite happen. We pushed a bit higher, and we have since then, so yesterday we retraced this candle that went from the high of 4027 to a low of 3954. So not a huge sort of candle, about about sort of 70 points, and this actually means 73. This actually means that it's not a big push, but certainly we've seen bigger candles relative to size. But certainly what it does mean is that if you look at the size of this candle, and you look at the size of this candle back in August, it certainly, at least to me, seems to signal that we are going to continue lower. And what's really good about this is that we have basically stayed within and confirmed the top channel edge. Now, this is a little bit difficult because clearly, I'm rooting for this to continue lower, but there's a lot of uncertainty. And one of the things I was going to highlight is as well the divergence on the daily that I've mentioned before has actually come to pass. So usually this kind of divergence, as I said, takes about 2 weeks, and now we've had this sort of divergence from the end of October to the kind of middle of November. So we've had it for 2 weeks. Price sort of edged higher, but the CCI, the Commodity Channel Index, signal is that it should continue lower. Price has conformed now, and so the last time this happened, it conformed and price pushed much lower. As you can see, obviously we had this sort of pull back in September and continue. So we could have a push all the way down, as I keep saying, to these levels at 300-400, which is kind of where I'm sort of targeting. But that's obviously not going to happen immediately. One of the things that I'm going to finish on really today is if you look at the move from the 16th of August there to the 29th of September, I mean, you do the maths, but it's really kind of like over a month and a half, right? So a month and a half from now would take us into January. Now, everybody, myself included, would like to finish the year knowing what my account looks like, knowing what I've achieved or not achieved, and it would have been nice, of course, to sort of finish the year in glory. I was doing really well in October prior to this CPI, and that sort of caused a lot of problems. So it would have been very nice to have continued lower at this point, but it is sort of edged higher, and that sort of really hurt me. So I'm not saying that unfortunately it's going to help me much to try and sort of hope for this to happen within the end of December. Unfortunately, it's going to skew my stats for the year, but I would say that it would be a big push for that to come down so quickly, because now really we've got the 30th of November speech from Jerome Powell, and then after that it's all plain sailing. If there's a media blackout at the end of that week until the Fed rate decision in December, so a whole week of nothing. And usually when that happens, from memory, I haven't done a study on this, but from memory, when that happens, or recently, the Standard & Poor's 500 has been trying to edge higher, as though it were a naughty child when the parents stop telling them what they shouldn't do, and they go out and leave them by themselves. It sort of, the warning lasts for a few hours, and then they forget all about it and go and do naughty things. And the naughty things to be done at this point, from all points of view, is to try and push this high and push against the Fed. And we all know that's just a losing game. The Federal Reserve have made it very clear they're going to fight inflation, and not just with the stopping of QE, but the reversal of that, which is making financial conditions tighter by essentially taking money out of the system, and that's a QT. And that's been going on fairly well. I've shown you that in one of my videos very recently, how much we're basically kind of unwinding quite a lot. We came from about 9 trillion and we're down to 8 something trillion. So it's really that's running at a steady pace, and the money supply from the credit line from the Fed is shrinking. So it's still plentiful, but it's shrinking compared to what it was. So the Fed is not going to continue easing, in fact, or pivoting, or any of that nonsense. It's clear that this is not something to. So I think this turn here is clearly just an indication that we reached a technical top, and it's just going to continue. There's nothing to push this higher. No excuses, no option games, no fundamental narratives to be spun, and this is just a losing game. So the bigger sort of force is gravity, and gravity is at the bottom of this chart. So I think I have to come out strongly here to say that it would be great if people who have statistical sort of studies done on the Santa rallies and all that could for once admit that this is not one of the situations, that 2008 can happen again, 4 quarters in the red in a row. And but of course nobody knows the future, so that it might well be that there'll be a rally and this will be blown out, and that's the end of the downtrend, and the bottom is in, etc. And then what will the Fed do? Well, we don't know that, and of course they're not sort of the enemy of the market. They are just trying to do something which is to fight inflation and to try to eliminate the problem of easing conditions by essentially reversing course. So I don't think that we can put names to things, fund managers, algos, the big money, the smart money, but it doesn't matter. It is people at the end of the day, and if restricting the credit line is going to hurt profits, they will pull out and put money into other things, and this will come down. So it's pretty simple how the mechanism is, and if you boil it down to it, you look at this chart and you go, well, other people will be looking at their at the trend and going, yes, we've pushed as much as we can, and now it's just let it sort of let it go the right way. I really don't know. Nobody knows exactly per person who is doing what. It's just a collective view of price. I'll finish there just to say that because of all these things, we've had these peaks before, and it's a deep correction that we're waiting for. And the deep correction will then take us below the 0 line again. We are getting closer to that on the dailies, you can see. On the 4-hour, just because that's kind of usually what we look at, the 4-hour will give us a more detailed view, and the detailed view tells us that on the CCI, we've already sort of zigzagged basically from above 0 to below 0 and back, and now we're sort of back to below 0. It's kind of a tricky one with the 4-hour in these conditions, I have to say, to set sort of short-term trades, very volatile, but that's kind of what it's showing us. And on the hourly, just to kind of finish, we have this where we are now. So the US market has just opened with this candle, as you can see, and we've come down from a very active day yesterday of sort of sudden drops here. I do not know why, and I haven't really investigated why, and I don't really care at this point, because it seems that we're just waiting for Jerome Powell to speak tomorrow, and it could have just as easily have been an update. To be honest, there's not really any motivation behind these moves sometimes, so I think it's just going to be there's something that's been taken out of this that's kind of just letting it drop. So whatever sort of prop has been removed, it's working, it's kind of spun down from these levels. So let's see what happens tomorrow. But that's all from me for today, and I hope you have a good day, and see you tomorrow maybe for another video, or perhaps the day after. Take care, and speak to you soon. Oh, and by the way, watch out, because I've got an interview coming out later this week. Take care. Bye.